How do you make sure that your company is profitable? A lot of times what I see is the small business where the owner is working really hard, has an amazing crew, the money seems to be pouring in, but at the end of the day there's no money in the bank. So what to do with this problem? What is it caused by? Actually, one of the most important things that you can do in that situation is look at what's called cogs. That's cost of goods sold. What that means is, actually for service companies will be cost of services sold, right? But that's a accounting acronym, meaning that whatever labor cost you have that it takes to produce your service and the immediate supplies, such as in the case of maid service, it could be a cleaning supplies. In some other services, it's immediate kind of consumable supplies that it takes to produce the good or the service, right? So cost of goods sold, very simple, does not include things like office staff or insurance and things like that. Just immediate labor plus immediate supplies. So you take that number, you compare that against your revenue. So let's say if I made $100,000 but my cost of goods is $50,000, then there's a pretty good kind of gross profit margin. That's pretty good remainder of the money that I can then use for my expenses, my compensation, and the profit. Now, what if you find out that you spend 80 or 90% of your revenue on labor and the materials? So if out of every $100 that I earn, I have to spend $80 to $90 on the immediate things that are absolutely essential for production of the service or the goods of that income, then that's not a good situation, because that exactly is why you don't make enough money. So what can you do if you find yourself in that situation? In that situation, you need to either raise the prices or reduce the cost of goods, or to do both. It's kind of difficult for you normally to think about it in those terms, but what you could do is make sure that every job that you do, every order that you do complies with your desirable cogs, right? So if let's say you find out that you have all of your expenses that are not cogs are, let's say, 20%, and your cogs are 50%, as we discussed, that means you have 30% in profit, right? It's like 50 plus 30 plus 20. So in that case, you're making pretty good profit, 30%, especially for service industry. So you're good. You can even improve it by, again, increasing your prices or increasing your revenue, or decreasing your cost of goods, cutting some costs, improving efficiency, things like that. If you look at just one job, each job that you do should have the same kind of ratio, right? So your magic number, the COGS number, is 50% or below. Could be 45%, could be depending on your expenses. Some companies have it as 30%. That's fine too. So figure out what that number is that allows you enough of a profit margin, that gives you enough money left over, and then always shoot for that number, or don't even take the job. Never take the job for the volume or for some other reasons. When you do that to yourself, then that's what causes lack of profitability, or no money in the bank, as I call it. It actually happened to my company back when we first got started. We're making a lot of money, and then suddenly it kind of dried up. The revenue was still coming in, but there's no money in the bank. And so we had kind of like 911 emergency meeting with the management, looked at the numbers, and we realized that our COGS were way high. They were like 85%, I think, or 90%. It was ridiculous. And that led us to kind of dig into it to figure out what happened. And it was because multiple factors. We had a lot of legacy clients who we took on when we were a much smaller company, didn't have a lot of costs. And just to kind of earn the market, we underbid ourselves. But on the other hand, we had employees who were kind of milking the clock, or not very efficient, or abusing the clock. So we had to fix both problems ASAP. So we went ahead and fixed both of them, and we became immediately profitable. It was a painful process. It took us about 2 to 3 months, but We moving forward, we make sure that every single job we do falls within those ratios. It's profitable, right? So if every single job you do is profitable, and that is easy to calculate because it's a small scale. Okay, I'm going to charge customer like $200 or $300. My labor cost and materials cost will be, let's say, $40, and that's a good number because it's below my target cog, right? So if you do that with every single job, that at the end of the month or at the end of the year, your overall picture is going to be much better than what is happening right now. I hope that makes sense. I will explain how to raise your prices if you find yourself in that situation with legacy clients in another video. So if you're interested, watch it and click on the link below and subscribe so you don't miss any more of my videos.